Okay, let's unpack this. We're doing a deep dive into the London property market today, and honestly, it's showing a really dramatic, almost paradoxical situation.
It really is.
Our mission, really, is to figure out why flat prices in the capital are actually slumping, while at the same time, rent inflation is just soaring.
Yeah, it's a fundamental disconnect. And the numbers, they're quite striking when you put them side by side.
Hmm.
We're tracking rent inflation that hit 7.3% in the 12 months up to June 2025.
7.3%, wow.
Right. But in that exact same period, the average price of a London flat actually fell year on year
Fell. By how much?
by 2.6%, dropped down to about £445,000 on average.
Okay, let's just pause on that 2.6% fall for flats. Because overall, house prices in London, they only fell 0.3%, right? So flats are clearly feeling this much more acutely.
That's exactly it. They're bearing the brunt of the pressure.
So what's the mechanism here? What's pushing flat prices down while rents are, inflating like crazy?
Well, what's fascinating fundamentally is the imbalance between supply and demand, specifically in the sales market for flats.
Okay.
We've seen months where things were just stagnant, but now that's turned into actual price falls. And a big reason is the number of homes listed for sale. It's around a fifth higher than it was just a year ago.
A fifth higher.
Yep.
So high supply meeting what sort of tepid demand?
Precisely. And that combination, it gives buyers these twin luxuries of time and choice, is how one source put it.
Right. They can take their time, look around, negotiate.
Exactly. It emboldens them to ask for and actually get significant price reductions. And this pressure, it seems quite specific to the capital, even compared to modest drops elsewhere. Like flats across England only dropped 0.8%.
So London's feeling it more. Okay, so if supply pressure is one lever, the second one must be affordability, right? That explains the lower demand side.
Absolutely. London's house price to earnings ratio is, well, it's dire. It stands at 8.22.
8.22.
And nationally?
Nationally, it's 6.55. So London is way, way less affordable. And that pushes people out.
It definitely pushes out key groups, especially first-time buyers. We see them increasingly looking towards places like Manchester or Bristol.
Makes sense.
And on top of that baseline affordability crisis, you had the end of the stamp duty relief. That added, on average, about £6,000 to purchase costs just within the M25.
Ouch.
Yeah. So the sources we looked at are quite clear. This isn't the market just, running out of steam. It's being actively reshaped.
Reshaped.
Yeah.
Okay. And that reshaping, it isn't just hitting the entry level, is it? It seems to be affecting the top end, too.
It is, yeah. Prime property, we're talking homes over £2 million, and properties in those very central boroughs where average prices are maybe closer to £1 million, they've seen double-digit declines in some cases.
Double digits. Wow. So that suggests something else is going on there beyond just average incomes.
It does. The reluctance you see at the high end, it seems to be much more about tax and political uncertainty. There are concerns floating around about potential wealth taxes, reforms to the non-domicile rules, proposed changes to inheritance tax. It all signals potentially higher future costs or risks for, high net worth individuals and international buyers.
So these are buyers who could afford the purchase price, technically?
Well, absolutely.
But they're pausing these huge asset decisions because they're worried about future policy.
Precisely. They're basically waiting to see what might happen, maybe with new tax announcements potentially in November. Uncertainty like that is absolute kryptonite for multi-million-pound deals. It slows everything right down.
And gives those buyers who are still looking even more leverage for deeper discounts, I suppose.
You got it.
Okay, this brings us right back to the core paradox. If flat prices are falling, supply for sale is high. Why on earth are rents soaring? How can both these extremes be happening at the same time?
Yeah, this is where the threads connect, and it's in quite a painful way for tenants. Rents are soaring because the available supply of rental properties has contracted. Sharp.
Protracted.
Yeah.
How sharp?
By 41% since the end of the COVID-19 pandemic restrictions.
41%. That's a massive contraction in available rental stock.
It is enormous, and it seems to be largely caused by a landlord exodus.
Landlords are leaving. Why?
Well, many are worried about increasing regulations in the sector and also facing pretty low rental yields compared to rising costs, like mortgage interest rates.
Okay,
So they're exiting.
okay, so landlords selling up.
Exactly. Which creates this glut of properties coming onto the sales market, often flats, which contributes to those falling prices we talked about.
Okay.
But at the same time, it absolutely starves the rental pool. Fewer properties available to rent means fierce competition among tenants, pushing rents up at that, 7.3% inflation rate.
So the very act of landlords selling fuels both trends simultaneously. Falling sales prices, rising rents.
That's the dynamic. It's quite something.
That 41% contraction, though, it still seems extreme. Are these landlords genuinely fleeing because of regulation, or were the underlying economics already so marginal that the extra rules are just the final straw?
I think the data points more towards the latter. For many, the combination of regulatory burden and rising costs just makes investing in buy-to-let financially unviable, or at least much less attractive than it was. Selling becomes the logical option.
Which raises a really important structural question, doesn't it?
It does. When policy, intended or not, pushes property owners out of the rental sector, yes, it might create a temporary buyer's market for those flats being sold off.
Giving some buyers an opportunity?
Maybe, but it simultaneously fuels this intense inflationary squeeze on the very people who have to rent, often people who can least afford it.
The market is absolutely being reshaped, as you said.
Yeah.
So I guess the final thought for everyone listening is to consider the long-term impact. If this restructuring continues, what does this new shape of the London property market mean for the future? For the availability, the cost of housing, for all the people who actually need to live and work in the capital to keep the city and the economy running?
That's the critical question, isn't it? What does this reshaped market actually look like down the road, and who does it serve? Something to really mull over.